Okay, so we move to the second part here, really other loss relief provisions in relation to corporations. And this particular video is short and pretty straightforward, but let's remember in terms of these other losses, obviously we're talking about areas outside of trading losses. You know, if we get a reasonably large OT question or a question that, let's say, perhaps pervades a number of different loss areas, these are the ones that are going to be included. Okay, he's going to include in a meaty loss relief question that relates to corporations one or both of these, absolutely. And there's not a lot to it in terms of understanding. So let's deal with property business losses first. So we've got a company, let's say a private limited company for argument's sake. They're renting out properties and indeed they make losses based on obviously rents receivable less allowable expenses. So what do we do? What do we do with that property business loss? So really, in essence, what we do is relieve it in really two different ways. Now note, in terms of the first way, you'll see here that this is automatic and mandatory. It's not optional. So in other words, if you have a property business loss and you are a company, you must offset that against total profits in the same accounting period. So picture a scenario. We've got a company, multiple forms of income, trading income, interest income, property loss, okay? What do they need to do? Well, they stick the loss in as a negative and offset it against the trading income and the interest income. And remember, mandatory. It's not like, well, no, I want to carry it forward. You can't, okay? Now, once you've done that, if you still have losses, then you carry forward against, note, future accounting periods, provided the property business continues, okay? Again, total profits. So it's total profits in both cases, First, automatic mandatory, and indeed, if the property business still exists, then carry it forward, okay? So, quite straightforward, I hope you agree. Now, what about capital losses? Now, this is even more straightforward. Basically, very much like losses for individuals under the capital gains tax banner. Capital losses for a company, are set against current year gains and then future chargeable gains. So note, let's say we've got a company, they've made a capital loss, they've sold a building and it's a loss of 50,000, okay? Can they offset it against total profits in the current year? No, they can't, okay? They can offset it against current year gains, but let's say they've done that and they've still got losses. Then you carry it forward to future chargeable gains. So you see the difference between the property area and indeed this area of, let me just open this up so you can actually see it, this area of capital losses, So really what we're saying is that in terms of property business losses, let me just go back to this, my apologies. We're saying that the treatment is completely different. Here we keep seeing total profits, but we do not see that down below. In effect, capital losses are really ring-fenced, aren't they? In other words, they put a ring around them, a circle, and say, no, only against current year capital gains or future gains. And really that's it, Nothing much to worry about at all there. But let's not ignore it and let's do questions, let's practice. Okay, thanks for listening to this part 2. Hope you found part 1 helpful too, and well done for keeping at it.